How's it going, everyone? It's Sam. Today I want to talk about whether Bitcoin's dead, which hint hint it's not, but some people might think it is for a couple different reasons, and why it is your golden ticket out of where you're at right now. If you don't mind, hit subscribe, turn that bell notification underneath the video. I'm going to apologize ahead of time too. I'm a little bit under the weather, so in case I'm coughing or my nose is running, I apologize for that ahead of time. I'm going to try to make this short so that way it doesn't bother my throat too much. Now, let's get into it. As you can see, the market has been pretty much unchanging. It seems like it's been forever, and a lot of people are wondering, is crypto dead? This is the hard part of the bear market. Not when price is going down or pushing up violently, but when it's boring. And a lot of people are asking, what's up with crypto? Is it just going to be left behind? We've seen a lot of stocks move this year. Crypto's moved as well, but not recently. When you look at Bitcoin's price, the last one day we've basically done nothing. The last 5 days we've gone up a couple percent. The last month we've gone up a couple percent. The last 6 months we're down 5%, but we barely moved. We've just been stuck between 25,000 and 31,000 on Bitcoin, which is very little volatility. Now keep in mind that we do have the Bitcoin halving, so usually people gear up for Bitcoin right ahead of that or right after. That's when we see bigger price movements, not necessarily the year before or the 6 months before the halving. Usually this is kind of a quiet time, and we can see that in Google search trends too. When you look, we're at the lowest level of searches on Bitcoin since back in 2021. When the price started to move. So this is really interesting that there aren't that many people actually looking up Bitcoin. Now, I think there are a couple reasons to explain this. First of all, we could see like a nice little trend line. That's just interesting. From the previous peak in 2017 to here to where we are today. So maybe it'll break out to the upside or the downside. But we're still seeing a good amount of views. If you just look up crypto or Bitcoin, we're still seeing 20,000 views on a video that's just a rehash of Brian Armstrong. We're still seeing 25,000 on newer videos from crypto influencers. We're seeing a lot more views than we used to in the last bear market. And I think that kind of explains some of the Google trend data, just that a lot of people know what Bitcoin is now, and maybe they have their favorite places to go hear about Bitcoin, like on YouTube. They have it, they're subscribed, so they don't have to actually type it in. I think that's a big part of it. And a lot of people just are holding long term. They're not really worried too much about what Bitcoin's doing now. They realize as soon as the Fed changes their policy, that's when Bitcoin's going to do really well, or closer to the halving. So some people have just checked out, but you can see that a lot of people are still holding. The percentage of Bitcoin supply held by long-term holders has officially reached its highest level ever at 76.09%. So people still continue to hold, even if they're not tuning in as much, which obviously is very bullish. If there are less people selling, then there's less selling pressure, which is pretty obvious. The number of Bitcoin addresses with over 1 Bitcoin continues to go up as well. People continue to buy more and more, add to their long-term bags, which is obviously bullish. More people are getting more and more invested in Bitcoin. And we have to remember that Bitcoin is still a very small market. Crypto is still a very small market. This is a nice visualization of how big cryptocurrency is compared to other industries. Keep in mind this was made a couple years ago, so actually crypto would be about 10 of these boxes right now. But a lot of these boxes would be bigger as well. The U.S. budget deficit, military spending, coins and banknotes, all would be bigger. Fed's balance sheet, much bigger. Billionaires, gold. And it just goes through how big some of these different companies are, some of these different industries are. I mean, Apple's twice as big as it was back in 2020. But you can see how small cryptocurrency is compared to global debt, compared to global real estate, compared to global wealth, compared to derivatives. If crypto just becomes a slightly bigger market on this list, it could have huge implications for how much we make in crypto. And I made this fun little exercise showing how Bitcoin is probably your ticket out of whatever situation you're in right now. Obviously, I've talked about this before, but the biggest thing you can do to achieve wealth is to make more money and to invest it. even if it's in just like an S&P 500 index fund, that's a great option. If you can make more money, that makes it so much easier, because let's say you invest $5,000 and you make $100,000 a year. Well, if you make another $5,000 a year, just a 5% increase, you can double your investable amount of money. So that's a huge thing that you have to do. But let's just move over to talking about how you can probably make more in Bitcoin than a lot of other industries. Now, that's assuming that you think Bitcoin's going to continue growing. And let's say it hits gold's market cap. That would be a 25.33x from here. Now, what if it takes 10 years and gold continues to move up just 2% a year? Well, then you would have a 31x, because keep in mind, gold will probably move up slightly. It's an inflation hedge. So if it moves up 2% a year and Bitcoin still hits that market cap, you're going to have a huge gain, 30.8x. So what if, let me just move myself a little bit here. What if you dollar cost average into Bitcoin? Well, obviously it's going to get more expensive over time, but how much money can you make? So in this example, this is if you put money in right now and it grows to be gold's market cap and gold continues to move up. But even if you dollar cost average, it's still a great scenario for you. Let's say Bitcoin moves up to $54,000 in 2024, then it moves up over 100 in 2025. Obviously, the more it moves up, the earlier you are in your investing journey, the harder it is going to be to continue to accumulate Bitcoin because it's more expensive. And we're just going to assume that there's this super cycle just to make the numbers easier, and it starts moving up a little bit more slowly after it hits 100,000, but eventually it hits gold's market cap 10 years from now. So this would actually be 10 years of investing, but technically 9 years from now. So you would have invested $65,000. You start off being able to buy almost a quarter of a Bitcoin with $6,500. And I put $6,500 in here because that is how much you can contribute to an IRA, a Roth IRA or traditional IRA in 2023. So I think a lot of people that invest probably can get close to this, if not already hit $6,500. So just kind of a benchmark. Then by the end, you're not even able to buy 0.01 Bitcoin with $6,500, but you would be able to accumulate over half a Bitcoin in this scenario, and your average, and you would have the value of $482,000. So pretty good return there when you consider you invested $65,000, you made $482,000. So even if you dollar cost average, your upside could be 7.41x. Now tell me another industry that gives you a 7.41x over 10 years where you dollar cost average into it. Obviously, you can make it in the stock market. You can make it in derivatives or options, but that's very difficult. Some people can do it, but even if you had a 10x stock and you had half your portfolio in it, you still probably wouldn't hit 7.41x over that 10-year span. Plus, you're going to have to invest in something really risky. Obviously, Bitcoin has some risk to it, but I think this is a pretty awesome example of how you can gain wealth in Bitcoin, nearly $500,000, just over 10 years of DCAing. Now, I think the key is to keep up with Bitcoin. If you're going to invest in crypto, you need to at least get what Bitcoin makes in returns, because it is so much safer. Like when you look at this list, Bitcoin is by far the safest crypto on this list. Even stablecoins, I think, could be riskier in some respects. I mean, think about how many times USDC or USDT has depegged, or there's been some worry about it. Think about the other stablecoins that have fallen. So over time, I think Bitcoin is less risky even than these stablecoins, especially when you consider these stablecoins lose to inflation every single year. Bitcoin outpaces inflation if you average it out. So kind of an interesting thought exercise there. And when you are investing in cryptocurrency, I think it's important to not only make sure you're keeping up with Bitcoin, but also keep all your investments straight, which is why I created a net worth tracker. I'm creating it now with a couple other people. I'll put a link to this underneath the video, Bag Tracker AI. You can pre-register right now and be one of the first people to be included in this, but you're going to be able to view all your crypto stocks, cash, and other assets and liabilities in one place, and also compare it to just Bitcoin and see how your Bitcoin net worth has gone up over time, along with other cryptocurrencies as well. Now, as we continue to move on, people are going to think you're lucky. If we move up, people are going to think you're lucky, but you'll realize that there are bear markets. There are tons of people spreading FUD. There were a ton of collapses of exchanges and wallets and so many different things, but you're going to make it to the top if you can just last long enough, and people are going to call you lucky. So that is the price you have to pay for success in this industry, but I will be here along with you saying, hey, congratulations, you made it through, you did this, and you are not lucky. So hit subscribe, turn that bell notification so you can see future videos like this where I tell you how great you are, and I'll see you in the next video.